CNBC-TV18, embarking on a quarter century of excellence.
Frontline indices notch up some more gains, but the advanced decline ratio points to weaknesses in the broader markets. Metals and energy lead gains, while IT and industrials trade soft. India needs to add additional capacities to avoid imports, says JSW Steel CEO Jayant Acharya, adding that the company has a 1 lakh crore rupee capex plan to expand capacity to 50 million tons by the end of the decade. SBI Chairman Dinesh Khara says 2024 should see interest rates being cut as inflation comes under control. He adds that without promising macros, banks will think big and bold. Zomato slips on a GST show cause notice of 402 crore rupees relating to delivery charges, while Canara Bank gains on its plan to list its mutual fund arm, and KPI Green gets a boost from its bonus issue plan. NTPC Chairman and Managing Director Gurdeep Singh says the power major will increase capex by 30 to 40% going forward, adds that the target for the renewable business is 60 gigawatt by 2030 and the green arm will be listed in a year or two. Hello and welcome to Business Lunch. I'm Sonal Bhutra and those are the top headlines that we'll discuss in greater details. For the markets, there's no stopping the rally. It, of course, is the last monthly expiry as well that we have today, and markets are at the day's high, 104 points higher on the Nifty as we speak. The broader markets, the mid-cap index that is, it is doing well. It is 0.4% higher. But if we look at the advanced decline ratio, it is in favor of the declines right now, marginally. But yes, that indicates that there is some weakness in the broader markets that's starting to come up. The small cap index also is higher as we speak. It's up around 0.7%, and the energy basket and the PSUs, they continue to do well. So that was the theme that we saw yesterday, and that continues to be the case today as well. So the CPSC index is up 1.6%. The energy index too is at the day's high, with the likes of all these oil marketing companies surging in trade. Oil India and ONGC are the other big gainers as well. So of course we're seeing a lot of momentum across the board, but let's focus on some other stocks now. The National Stock Exchange is set to rejig its equity indices by the end of today's trading session as a part of their quarterly index rebalancing. Vivek Iyer is here to explain what it means and what would the outcome be. Vivek.
Well, absolutely right. So the NSE today being the quarterly end, especially as far as F&O positioning is concerned, today is the day in which you will see all of the weight increases, the inclusions as well as exclusions across all of the NSE indices. That includes the Nifty Bank, the CPSC index, and even all of the other indices as well. Why is it important? So all of the passive funds that track these indices will have to make the changes in today's trading session itself, which would lead to inflows and outflows in stocks. So quite a few stocks will be impacted. So what we've done is we are highlighting the top 5 stocks that will see inflows and the top 5 stocks that will see outflows today. So Ipca Laboratories, close to $7 million of inflows will be seen, close to 1.5 times the average daily traded volume. Colgate Palmolive, Lupin, Bharat Forge and Dr. Reddy. These are the stocks that will see inflows, while on the other hand, the stocks that will see outflows are Indian Hotels, Godrej Consumer Products, Cummins India, Torrent Pharma, ABB India. Remember, all of the data that we have in terms of flows is from IIFL Alternative Research.
Okay, all right. Thank you, Vivek, for joining us with all those details. Let's talk about some exclusive corporate opinion coming in from the SBI Conclave and listen into Jayant Acharya, the joint MD and CEO of JSW Steel, what he had to say on the company's capex plans, capacity expansion, domestic steel demand, and a lot more.
We plan to take our capacities up to about 50 million tons before the end of this decade. We see a strong momentum, maybe not 15%, but a 10% double-digit, 8 to 10% growth is something which is easily possible. And this would call for a capex, additional capex in excess of 100,000 crores. I think, India being the fastest economy, we are seeing a very strong growth momentum in India. And this will continue for, I think, about 2 decades. We call it the nation-building phase of the country. And during this time, structurally steel will be required. Usually steel demand accelerates at a faster pace during this, let's say, period, 1.5 to 2 times of the GDP. So in the last 2 years, if you look at the demand, the steel demand has grown by 13% the previous year, and this year it's growing at close to 15%. If India wants to be self-reliant in terms of steel, we need to add capacities just to make sure that we don't import steel.
Okay, that is from JSW Steel, but let's also listen in to Gurdeep Singh, the chairman and MD of NTPC, about the road ahead for capex and the company's plans for their green energy vertical.
Our capex has been in the range of around 25,000 crore kind of thing. Going forward, it is going to increase, and it is going to increase at least by 30-40%. By 2030, we will be adding on the renewable side 60 gigawatt. So today we are having 3.5 gigawatt which is commissioned. 7.5 gigawatt is under construction. So it's almost every month something capacity is getting commissioned. I think down the line in next 1 to 2 years, as we add up the capacity and further there is a pipeline of growth and further utilizing not only as the energy, but I think once the storage starts becoming the reality, means it's becoming the affordable storage solutions. This green energy will be having much more scope, and maybe I think down the line about, let us say, about decade or 2 decades, I think this may be even overtaking many other companies itself. And we would be definitely looking forward, and that's our thinking process, which is nothing secret in that maybe I think down the line about a year or 2, then we will be going to be listing this arm anyway.
Okay, that is about NTPC's green energy vertical, but let's get in more opinion from the SBI conclave and listen into Sanjeev Sanyal, member of the Economic Advisory Council to the Prime Minister. He speaks about what went behind the policy making when the dirty dozen NPAs were identified and sent to the IBC back in 2017.
We used the Insolvency and Bankruptcy Code instead of the bad bank to start cleaning the banks. And once it began to roll and some of the cases began to get liquidated and the money began to come back, it also changed the entire culture of creditor rights and so on in the country. So even the marginal cases where, that began to tip over, that part of the story very well. And so that is how the whole machinery began to go where today we have, as of yesterday, I believe, the gross NPA ratio of the banking system has dipped to 3.2%. I could not have believed this in the summer of 2017.
Okay, all right, that's the word coming in from Sanjeev Sanyal. With that, we'll slip into a break. When we return, India is ready for takeoff, says the CEO of National Stock Exchange, Ashish Chauhan. We'll get you excerpts on the other side of this very short break.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Business Lunch. And as the Indian market hit record high after a stellar run in 2023, my colleague Yash has compiled some data on how the depth of the market has changed in India as the equity cult grows. Yash, take it away.
Well, Sonal, as you rightly pointed out, we are closing the year with markets being at all-time high levels, and there is some very interesting data to sum up the year for the capital markets as far as India is concerned. Indian market capitalization this year has crossed $4 trillion US dollars. That is the largest in the world. Also, that market capitalization has taken the market cap to GDP with a growth of about 10% in the current calendar year, that is CY23. With all of that coming into place, India now has 74% global share in equity derivatives and 61% global share in derivatives across asset classes. Now, there's a very interesting aspect as far as this data is concerned, and that is amongst the states of India. The top state with the most number of registered investors is Maharashtra, but there's a little change in the second position this time around. Uttar Pradesh has beaten Gujarat with more registered investors, which came in the current calendar year. So that will be an interesting point to note. As far as the markets and the indices are concerned, Nifty 50, a return of 18% has been given as far as current calendar year is concerned. Nifty 500 is up 23%, and the interesting part comes now when Nifty midcap 50 is up 47% and Nifty small cap 50 is up 60%. Primary market action, we've spoken so much about primary markets this year. NSE main board IPOs, the fundraising was down about 24% this year. Emerge, which is the SME platform, the fundraising was up 175% this year. Looking at secondary market action, rights issue, they were up 120%. Preferential allotment, that was down about 46%. Funds raised via QIPs, that increased 5 times. And OFS issues and the funds raised there, that also grew about 44%. The funds raised via InvITs, that grew 3 times. And REITs also saw a growth of about 5 times. This is as far as equity is concerned, but let's look at debt. The total funds raised via debt, that was down 4%, but the total fund mobilization, that includes primary market, secondary market, debt market, that was down just about 2%. Final thing, as far as the total turnover in trades in calendar year 2023 is concerned, cash market was up 16%, equity options up 33%, equity futures down about 3%. We recently, had our managing editor Shireen Bhan speak to Ashish Chauhan, the MD and CEO of the National Stock Exchange. Let's look at what he had to speak about the entire equity market cult in India as far as CY23 is concerned and where India stands on that particular point.
Now UP has become larger in terms of number of investors compared to Gujarat. So first is Maharashtra, of course, with 1.5
crore.
So UP
has beaten Gujarat in terms of the number of investors.
So UP is now calling shots in many areas, but also in now stock markets. And so you can see the demographics are changing. I was in Uttarakhand a few days back, and I was checking out the number of investors coming from there, and it is the same proportion as the average Indian proportion in the stock market.
One significant inflection point that you expect or anticipate to see in 2024. The market is waiting for that. NSE IPO, are we likely to see that in 2024?
I don't know whether you've invited my regulator, but I wish.
Okay, that is an exclusive conversation for you, but we'll move on to another exclusive now. In yet another move of exercising caution, we understand RBI has asked some banks to bring down the credit deposit ratio. Abhishek is joining us with that detail.
Well, sources do tell CNBC-TV18 that credit deposit ratio is on RBI's radar. Now, sources say that RBI has asked some of the banks to lower their credit to deposit ratio to below 75%. Now, RBI likely looking to curtail credit exposure of lenders. We have seen in recent times as well. Now, lower credit deposit ratio, the reduction can impact some liquidity to move from, the loan book to investment book. That is what I have been speaking to bankers as well. The shift can impact the net interest margin anywhere around 75 basis point, roughly plus or minus 25 basis point over there. Now, growing deposits can pose a challenge, posing a threat to credit growth as well, because liabilities will not be needed to that extent to grow the loan growth, as they will have to curtail the loan growth as well. Lenders with lower credit deposit ratio or below 75% level of credit deposit ratio will not get impacted. So So as per Q2 FY24 numbers, lenders with 75% plus in terms of CD ratio includes IDFC Bank, Suryodaya Bank, Equitas Small Finance Bank, Utkarsh Small Finance Bank, Axis Bank, Bandhan Bank, etc. And banks who have a credit deposit ratio lower than 75%, that includes the likes of Canara Bank, State Bank of India, PNB, IDBI Bank, as well as Bank of India. Now, in recent times, we have seen RBI exercising caution with respect to, banks or NBFCs having their loan growth. So RBI had curtailed loan growth in unsecured segment as well, and RBI had increased, risk weight assets to, banks' exposure to NBFCs and other products as well. Back to you.
Okay, all right. With that, we'll move on. And as we slip into a short break now, 2023 has been a year of several landmark cases in the Supreme Court. From same-sex marriage to Article 370, the Apex Court heard some of the most high-profile cases and delivered its verdict. The Adani Hindenburg matter was arguably the biggest corporate case of the year. Ashmit Kumar is here with the year that was in India's Supreme Court.
The year 2023 was a landmark year with several key issues being heard or decided by Indian courts. So here's a look back at the biggest news stories out of Court Corner. Arguably, one of the biggest cases was the landmark ruling by a 5-judge bench in the Article 370 case. A case that probably has more political repercussions than legal. The Supreme Court upheld the abrogation of Article 370. The Supreme Court held that J&K enjoys no sovereignty and that the Indian Constitution is applicable fully. The Supreme Court also hoped that statehood should be restored soon and that elections would be conducted before September 30th, 2024. Number 2, here's another high-voltage case, the same-sex marriage matter. It was again a ruling by a 5-judge bench. The Supreme Court gave a big no to same-sex marriages and to the fundamental right to marry. The Supreme Court also held that it's not the court's job to grant the right to marry to same-sex partners and that issue should be left to the government. Review petitions, meanwhile, have already been filed. Number 3, here's another case with big political implications, especially ahead of the 2024 elections. In March, the Supreme Court held that election commissioners had to be appointed by a panel of Prime Minister, Leader of Opposition and the Chief Justice of India. In August, the centre introduced a new law that replaced the CJI with a cabinet minister. Now, even as the parliament granted its nod, former Supreme Court Judge Rohinton Nariman claimed that this will hurt the Election Commission's independence and that free and fair elections will soon become a chimera. Number 4, Supreme Court also saw multiple rounds of legal contests between the Delhi and central government over administrative control over the national capital. In May, the Supreme Court cited the federal structure and granted Delhi government control over administrative services. Now, much like in the case of the Election Commission appointments, the centre again came out with a new law after the Supreme Court ruling and gave the Delhi LG the powers of administration. Number 5. This was the biggest corporate case of the year, the Adani Hindenburg saga. In March, the Supreme Court directed for a SEBI probe and asked an expert panel to review the regulatory framework in place. Now, in June, the expert committee came out and said that there was no regulatory failure and there was no evidence against Adani. In August, SEBI informed the top court that probe was completed in 22 out of 24 cases. In November, the Supreme Court reserved its judgment while observing that there was no reason to doubt SEBI's investigation. Number 6, the Supreme Court also heard pleas challenging electoral bonds. Petitioners claimed that bonds were opaque and where only the government knew the donors. The centre submitted that voters can't have an overbroad right to know and that the Supreme Court reserved its judgment after that while flagging selective confidentiality of this scheme. And finally, number 7, this was not so much a case, but rather an issue, a sensitive issue at that. Now, keep in mind, in 2018, 4 sitting Supreme Court judges held a press conference against the then CJI, Deepak Mishra. The judges had flagged allocation of cases, of especially sensitive cases, to specific judges. Now, cut to 2023, and similar concerns were shared by senior advocate Dushyant Dave in a letter to the CJI. Reports have cited how the case on judicial appointments was taken away from Justice Kaul and how some politically sensitive matters were listed for hearing before Justice Bela Trivedi. Now, with the Supreme Court scheduled to hear the CAA case as well as the review of the same-sex judgment matter and also likely to deliver its judgment in the Adani Hindenburg case as well as the electoral bonds case, 2024 is already looking like a busy year for the top court.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, Akash Ambani, the chairman of Reliance Jio, spoke at the IIT Bombay Tech Fest yesterday and shared his thoughts on the growth of AI and essence of entrepreneurship. Listen in to what he had to say.
In terms of AI, I think it's going to transform every area of products and services. You know, we're working very hard to launch AI not only as a vertical inside our organization, but also horizontally across all our sectors. And I think we've just scratched the surface with, large language models and generative AI, and the next decade is going to be defined by these applications. I think, again, drawing back to how it can impact society at a large, we're working, right, I mentioned, across all our consumer ecosystems to launch AI services and products that people can consume. But I think the transformative areas of AI that will be is what can we do it for social good. The first point I want to make is it comes to company organization design. And from our perspective, we've always organized ourselves in extremely small teams. We call ourselves the largest startup in the world. But fundamental to that is a culture that we've tried to imbibe within Jio. And for us, we have extremely small teams working on focused tasks. And that really gives us a methodology of try fast and fail even faster. And that is the journey of an entrepreneur, right? To keep on trying things and pushing that innovation to new and new limits.
Okay, all right. So that is about artificial intelligence. But let's also bring you now some important updates from North India, where the IMD has issued a dense fog advisory for Delhi, Haryana, Punjab and Uttar Pradesh. This has led to a delay or even cancellations of several flights and trains. In fact, as of 8 a.m. today, around 108 flights were impacted and 22 Delhi-bound trains got delayed. Sources tell CNBC-TV18 that 12 out of the 16 diversions in Delhi were due to captains not being trained enough to land in poor visibility conditions. Now, although the condition has slightly improved during the day, the IMD predicts that the fog could last through the weekend. Okay, let's move on to some somber news now. Popular Tamil actor and DMDK founder Vijay Kant, famously known as Captain for his portrayal of military characters in Tamil cinema, passed today morning at a private hospital in Chennai. The 71-year-old actor was on ventilator support for pneumonia. He was also tested positive for COVID. He is survived by his wife and 2 sons. Prominent leaders and celebrities, including Prime Minister Narendra Modi, expressed their condolences on the demise of the actor-politician. Okay, all right. On that note, we'll take your leave on this edition of Business Lunch. Do stay tuned. Mid-cap radar comes up next. Thanks for tuning in to CNBC TV 18, and for more news and updates, follow us on all the social media platforms.